Hey guys, Cameron here with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I've learned, things that helped me build up a sizable room portfolio in about 2 years and now manage that portfolio. Today, guys, I want to talk about how to increase some income. You know, we're talking about rental real estate and we focus around long-term residential real estate, sub 4 units. That's not always the best thing to buy, or they're not always the best way to increase your income. So I want to talk a little bit about that today and some other strategies to increase your income, because we believe at Emerson, investing from a place of financial strength allows you to buy more real estate and allows you to enjoy the luxuries that real estate offers. Coming from a place of a poor financial situation or a poor financial foundation, real estate becomes really hard. So I'm going to get into that today. Before I do, if you guys find value in this, please like, subscribe, share it with somebody. If you don't, let me know why. Let me know what I can improve with, or some questions and things that you guys would like to see. If there's something that we're not covering, or you think we're covering them properly, let us know. Love to get the feedback. So, why do most people get into residential real estate? I see it a lot because people say, well, I want the income, right? I want to live off the properties. I want to buy 5, 10, 15 properties, and I want to kick back and I want to enjoy my freedom. I don't want to have to go to work for the man or anything. I can tell you, I've got several dozen properties. I bought them over the past decade. Even when I bought really good at 2-3, I've got properties with 3.25% interest rates. Even when I bought really good and locked in with some really great financing, the property's only made like $100 to $200 a month. Now that I've held them and rents have continued to rise, but my interest rate, my financing has stayed the same. Property taxes have continued to rise. Insurance has, but I'm still getting a bigger delta over time, more cash flow. But I also had to put money into these, right? So that's kind of the dream is, I can make $400 or $500 a month, buy 10 of those. That's $4,000 or $5,000 a month. That replaces my income. I'm done. I think there's actually, especially now, at the time of this recording in mid 2024, it's very difficult to find deals at cash flow. It has been difficult over the past decade to do this because prices were high, even though interest rates were low and people were bidding them up. Now prices are high and rates are high. So we're kind of in this weird situation where almost nothing cash flows, or if it does, it's very, very little because it's the 6.5%, 7.5% interest rates. So instead of trying to find a property that makes you $150 or $200 a month, why not try to get a raise at your W-2? So if you make $50,000 a year and you can either get a raise at your job of 5 or 10%, if you get a 10% raise, that's an extra $500 a month. That's like buying 3 rental properties. Now, we will argue, and yes, I understand there's so many other ways to get value out of real estate. I totally understand that. But if you can have one meeting with your boss and get a raise, or go into another job or job hop and get a $5,000 or $10,000 a year raise, that's like buying a couple different rental properties, and you had to have $0 out of pocket to do that. Think about that for a second. You could either put $30,000, $40,000, $50,000 down on a rental property, lock that money up, deal with the tenant, deal with the transaction. It's very illiquid. The money is sitting in there. Now you got to list it and wait for a tenant to come in and then get that in. Or you could have one very uncomfortable conversation with your boss, or go through some really crappy, and I get it, I don't want to interview either, but go through a few interviews and get a job offer and raise your income, 5, 10, 15 grand. And I don't give a shit what price range you're in. Like if you're in a $50,000 a year job, you can definitely find a $60,000 a year job, or a 70 or an 80. And if you're in 70, 80, you can find 80, 90, 100. If you're in 100, you can find 120, 150. There's always room to move up on the ladder. Always. Now, let's just say you just had that conversation, you got a raise, and now you're like, Cameron, I'm ready to do something else. Another great strategy is house hacking. When I first bought my home, the very first thing I did when I bought my first place is I rented out rooms. I rented out a room to a guy at work. I rented out a room to my brother for a little bit. And that was an extra $400 or $500 a month per bedroom. So think about that. Again, if it's $400, that's about 2, maybe 3 rental properties. And you did very little. You listed on, Craigslist or Facebook Marketplace or something about, hey, I got a room. Now, obviously there are risks about it. It's not totally risk-free. I totally understand that, but I'm talking about specifically about increasing your income right now. So House hacking is a great strategy. Rent out rooms, again, an extra $500 could be like 3 rental properties. Even a good rental property, that would be 1, maybe 2, and you have no money out of pocket. You already live in the home. I understand people have families. This might be weird, but depends on how serious you are about increasing your income. Another option, side hustle. Now, not all side hustles are great. If you're really good at something, an artist or making something, creating things on Etsy, some way, maybe you drive for Uber on the weekends, something like that you can use to make an extra couple $100 a month, or $500 or $600. Again, $400 to $500, 2 or 3 rental properties, that'd be pretty damn good. If you're going to get a low investment up front on a side hustle, like an Uber, and again, I'm not saying go do that. I'm just saying this is an option that you have. There's all sorts of different side hustles that you can pick up. Hell, bartending, doing anything that can make you $400 or $500 a month pretty easily. So the other thing, there's a couple different other strategies I've talked about. If you own, this is very, so there's a wide range of audience. Some people that have no rental properties, some people that have several. So if you have several rental properties, this is something I talk about too. If you're hungry for deals, fix up your rentals. Instead of trying to find a deal and spend 40, 50, 60 grand, why don't you spend $10 or $15 or $20,000 fixing up your rental property? On the next turnover, blow out the kitchen, get rid of the carpet, put in LVP, upgrade the appliances, put in tile, make it more tenant proof. Do the things that you need to do to upgrade this property now, spend the money while you have it, instead of trying to buy a bad deal. It's another great way to increase your income. So, oh wow, fresh paint, new LVP, new kitchen. I think I can rent this property an extra $100, $200 a month. That's a hell of an ROI. If you've spent 5, 10, 15 grand or $20,000 doing several improvements and you get an extra $100, $200 a month, that's a great ROI. Instead of spending 40, 50, 60, 80, $100,000 on a new property that barely cash flows. So again, why do I mention this stuff? Because I strongly believe that you should invest in real estate from a strong financial foundation. And I can tell you that a lot of people get into real estate because it's cool, because, the cool kids are doing it, or because it sounds great, or because you don't know what else you want to do with your money. You like to talk about at cocktail parties, whatever the reason may be. But I can tell you that I bought properties personally from people who thought that. And then I ended up buying the property from them at 50, 60, 70 cents on the dollar. There are houses every single day that become dilapidated and outdated because the owners do not have the money to fix them up. I plead with you, please do not become one of those owners. Do not buy a property with no reserves. Do not buy a property expecting no maintenance, repairs, or CapEx. Do not do that. Buy rental property with a place and coming from a place of financial strength. When you do that, you'll be able to swing the roof replacement. You'll be able to swing the AC replacement when it comes up. And it sucks, but it's a lot better than saying, oops, I can't do that. I don't have the $5 grand to do that. Now, tenant's got to move out. Now your income source is gone and your mortgage payment is still needing to be made. Now what do? You sell it to an investor at 50, 60, 70 cents on the dollar. Do not become that kind of owner. And I'm telling you right now, it happens more often than you think. We see it as well with some of our owners. Oh, hold on, you got to hold on that make ready. I don't have the money to do that. Well, now we're sitting here and you're paying for lawn, utilities, you're paying insurance, you're paying the mortgage. We need to get some money in this property. So have the funds. Come from a place of financial strength, increase your income in times of duress, and invest in real estate from a place of strength. I hope that was helpful. If it was, let me know. If it wasn't, let me know. I appreciate y'all, and I want y'all to be successful in residential real estate because it's a fantastic wealth builder. Just do it intelligently. Appreciate you guys. See you.